Right now, somewhere in Canada, a senior is going to open their banking app on August 27th, see their OAS and GIS deposit, and feel their stomach drop because it's not what they expected. Maybe it's less. Maybe it's more. And they don't understand why. And they're afraid it's a mistake that Service Canada is going to come back and claw away from them later. Either way, they're caught off guard on a fixed income with rent due and groceries costing more every single month. I don't want that to be you. Here's the truth almost nobody explains clearly. Your August 27th payment is being shaped by at least 4 separate government mechanisms working quietly in the background all at the same time. One of them can raise your payment. One of them can lower it without any warning letter. One of them can even pause it completely, and every single one of them is triggered by a piece of paper most seniors don't think about until it's too late. Stay with me until the end, because I'm going to show you the exact document that controls almost all of this, and I'm going to show you the specific phone call script and form number you can use to fix a payment that's wrong, protect a payment that's about to shrink, and in some cases, put more money back in your pocket every single month for the rest of the year. If you've ever felt like these government benefit systems are designed to confuse you on purpose, today that stops. Let's break this down piece by piece the same way I'd sit down and explain it to my own parents. First, let's deal with the date itself. August 27th, 2026 is a confirmed Service Canada payment date for CPP, OAS, and GIS. That part isn't a mystery. It's on the official federal benefits calendar, the third to last business day of the month, just like most months. What's not obvious is that August sits right in the middle of a stretch of months where several yearly resets and quarterly adjustments overlap. That's why this particular payment tends to look different from what people were getting back in the spring. Let's go through exactly what's changing, one piece at a time. Point number 1, the quarterly cost of living adjustment. What is it? Old age security and the guaranteed income supplement are never frozen at one number for the whole year. 4 times a year, January, April, July, and October, Service Canada reviews the Consumer Price Index, which tracks how much prices for everyday goods have gone up, and adjusts your OAS and GIS accordingly. You don't apply. You don't fill out anything. It happens automatically in the background the same way your CPP adjusts every January. What is it worth? For the July through September 2026 quarter, that adjustment landed at 1.2%. On its own, that might sound small, but stack it on top of a monthly OAS and GIS combination that can run close to $1,800 to $1,900 a month for a single senior with little other income, and you're talking about real dollars every single month, not just once. If your very first payment reflecting this new rate came through on July 29th, then your August 27th deposit is simply the first normal full month living at that new, slightly higher baseline. If you're comparing today's number to what you were getting back in March or April, of course it looks different. You're comparing 2 different rates from 2 different points in the year. How do you get it? You don't have to do anything to receive it. It's automatic for every OAS and GIS recipient, but I want you to actually verify it instead of just trusting it blindly. Log into your My Service Canada account or MSCA if you don't already have one set up, and go to the Statement of Old Age Security and Guaranteed Income Supplement Payments. Compare your July amount to your April amount. You should see that 1.2% bump reflected clearly. If the numbers don't line up or you can't make sense of the difference, call Service Canada directly at 1-800-277-9914 and ask them to walk through the calculation with you line by line. Don't be shy about asking them to slow down and explain it. That's literally their job. Now, I already know what some of you are thinking because I hear this exact question constantly. If OAS and GIS only ever go up with inflation, why do I keep hearing about people's payments going down in the summer? That is one of the most important questions you can ask, and the honest answer is this. Your base OAS pension truly cannot be reduced due to a cost of living calculation. By law, it can only rise or stay the same. But GIS is a completely different animal because GIS isn't based on inflation at all. It's based on your income. And that's exactly where point number 2 comes in, because this is where most of the confusing summer payment drops actually come from. Point number 2, the annual GIS allowance and allowance for the survivor reset. What is it? Every single year, without exception, Service Canada recalculates your guaranteed income supplement using your most recently completed tax return. This isn't optional, and it isn't a one-time event. It's a permanent built-in feature of how GIS works, and it resets starting with the July payment cycle. Beginning with your July 29th deposit and continuing through August 27th and beyond, your GIS is no longer calculated using your 2024 tax return. It's now based entirely on your 2025 tax return. That's a full income year swapped out, replaced by a brand new set of numbers. And if anything about your 2025 income looked different from 2024, you are going to feel that difference starting right now. What is it worth? Let me give you two real-world scenarios because this is where it gets personal. Scenario 1, let's say in 2025 you finally stopped a part-time job you'd been working to supplement your pension, or maybe you reduced how much you were withdrawing from your RRIF because you didn't need as much that year. If your 2025 income came in noticeably lower than your 2024 income, your GIS can actually increase by significantly more than that standard quarterly bump we just talked about, because you now qualify for a bigger income top-up. For some seniors, this can mean an extra $50, $100, even $200 a month landing in their account starting in July and continuing through August, simply because their income dropped and the system caught up to that new reality. Scenario 2, now flip it around. Say in 2025 you had a one-time RRSP withdrawal, you sold a cottage or some property, or your pension income was temporarily higher than usual. Even if none of that repeats in 2026, Service Canada doesn't know that yet. All they have is your 2025 tax return, and that return is now driving your GIS calculation. Your GIS can shrink, sometimes by a meaningful amount, even while your base OAS pension is quietly still going up from that cost of living increase we covered in point 1. This is exactly why some seniors open their banking app in August and see a combined number that looks off. One part of the deposit went up, the other part went down, and the two changes are hiding inside a single lump sum that doesn't explain itself. How do you get ahead of it? Step 1, and this is non-negotiable. Make absolutely sure your 2025 tax return was filed, and filed correctly before this reset takes effect. Even if you owed nothing, even if your income was so low you weren't sure you needed to file it anyway. Until the CRA processes that return and shares the information with Service Canada, your GIS may be calculated using estimated figures, and in some cases, payments can be paused or delayed entirely until they receive accurate income information. Step 2, if your income was unusually high in 2025 because of something that genuinely won't happen again, an inheritance, a one-time property sale, a lump sum payout, call Service Canada and specifically ask about requesting an estimated income adjustment for the current year. This is a real legitimate option that lets them calculate your GIS based on your actual ongoing income instead of that one unusual year, and it can protect your monthly payment from an unfair, temporary drop. I know exactly what a skeptical viewer is thinking right now. Is this even legal? Can they really adjust my monthly payment based on some tax form I filed months ago without a phone call or a letter walking me through it first? Yes, completely legal, and here's the reframe I want you to sit with. This system exists to protect low-income seniors, not to punish them. GIS is designed to top up the people who need it most, and the only way the government knows how much support you actually need is by looking at your real verified income. The rule itself isn't the problem. The problem is that almost nobody explains this reset to seniors in plain language, so when the number changes, it feels like it came out of nowhere, like a rug pulled out from under you. It's not random. It's a pattern that repeats every single year, and now you know exactly how it works. Point number 3, the OAS recovery tax, which most people simply call the OAS clawback. What is it? If your net world income climbs above a certain threshold set by the government, a portion of your OAS pension gets clawed back, officially called the OAS recovery tax. This isn't a penalty for doing something wrong. It's simply a rule that reduces OAS for higher income seniors. And just like the GIS reset, every July the income threshold and the 12-month repayment period roll forward into a brand new cycle. This year, that's the July 2026 to June 2027 repayment year, and it's calculated using your 2025 income instead of your 2024 income. What is it worth? For higher income seniors, this can mean real, noticeable money disappearing from the monthly deposit. If your 2025 net income pushed past that threshold, Service Canada may already be quietly deducting a recovery tax directly from your monthly OAS payment, starting as early as your July or August deposit. That deduction is separate from and on top of anything you might owe when you actually file next year's tax return. For some seniors, this recovery tax deduction can mean $50, $100, sometimes several $100s less per month simply because their income crossed a line they may not have even been watching closely. How do you get ahead of it? First, pull out your most recent tax return and look at the recovery tax section. Your tax software or accountant can show you exactly where your income sits relative to the current threshold. Second, if you're close to that line, this is where talking to a financial advisor about pension income splitting becomes genuinely valuable. Using Form T-1032 on your tax return, you can split eligible pension income with your spouse, which can lower your individual net income enough to reduce or even completely avoid the clawback. Third, if you believe Service Canada is deducting recovery tax based on outdated or unusually high income that won't repeat, you can request an adjustment using your current estimated income for the year, the exact same process as the GIS estimate request we covered in point 2. Here's a question I get asked constantly, and I want to answer it directly instead of dancing around it. Why didn't my accountant ever mention any of this to me? I'm not here to throw accountants under the bus because most of them are doing exactly what you're paying them to do, preparing an accurate tax return. But your monthly Service Canada benefit payment and your annual CRA tax return are run by 2 different government departments using 2 different systems, and they don't always communicate that clearly to the person actually depending on the deposit. That disconnect between the people who calculate your taxes and the people who calculate your monthly check is exactly why so many seniors get blindsided every single July and August year after year without ever understanding the mechanism behind it. You are now one of the few people watching this who actually understands how the pieces connect. Point number 4, and this one is smaller, but it trips up more people than you'd expect: outdated direct deposit and banking information. What is it? Service Canada sends your OAS and GIS payment to whatever banking information they currently have on file. If you've switched banks, closed an account, or even just gotten a new debit card that changed some internal account details, and you never updated Service Canada, your payment can be delayed or bounce back, especially around a reset month like August, when other changes are already happening in the background. What is it worth? This one isn't about gaining or losing money in the calculation. It's about actually receiving the money you're owed on time, without a stressful gap where you're stuck waiting for a mailed check that can take 1 to 2 weeks longer than direct deposit. How do you fix it? Log into your My Service Canada account and check the banking information on file under your direct deposit settings. If anything looks outdated, update it immediately and do it well before the next payment date, not the day before. If you don't use MSCA, you can update your direct deposit information directly through your bank, many of which now offer a direct deposit registration service tied to government benefits, or by calling Service Canada directly and doing it over the phone with a representative. Some of you are wondering, if I call Service Canada to ask about any of this, am I going to trigger some kind of audit or review of my file? No. Logging into your account, checking your statement, or calling with a question does not put you under any kind of scrutiny. Service Canada representatives field these exact questions every single day, all day long. The only thing that genuinely puts your payments at risk is not filing your taxes on time or letting incorrect income information sit uncorrected for months. Asking questions protects you. Silence is what costs people money. Now let's circle back to what I promised you at the very beginning of this video, the one document that quietly controls nearly everything we just walked through. It's your 2025 income tax return. That single form is the trigger for your GIS amount, your allowance amount, if you or your spouse qualify, and your OAS recovery tax calculation, all at the exact same time. If that return is filed late, filed with an error, or missing a slip, every one of those numbers can be thrown off, sometimes for months, until the CRA and Service Canada catch up and correct it retroactively. Filing accurately and on time, even if you owe nothing and even if your income is modest, is genuinely one of the single most protective financial habits a senior in this country can build. So here is your complete action plan, and I want you to actually do these, not just nod along. Step 1. If you haven't filed your 2025 tax return yet, do it immediately. This is the single biggest lever controlling nearly every number we discussed today. Step 2. Log into your My Service Canada account and compare this month's deposit to last month's line by line so you know exactly what changed and, more importantly, why it changed. Step 3. If your income dropped in 2025 because you retired further, stopped working, or reduced your RRIF withdrawals, call Service Canada and confirm your GIS reflects that lower income properly. Step 4. If you're near the OAS clawback threshold, talk to a financial advisor about pension income splitting through Form T-1032 before it costs you more money next tax season. Step 5. Double-check your direct deposit banking information is current, so a simple outdated account number never delays money you're already owed. This isn't complicated once you understand the pattern behind it, and here's the part I really want to leave you with. This exact reset happens every single year around this exact time using the exact same mechanisms. Once you understand it this year, you'll never be caught off guard by it again. If this video helped make sense of your payment, please do one thing for me. Share it with another senior in your life who receives OAS or GIS, because I promise you, the vast majority of people have no idea any of this is even happening behind the scenes. Drop a comment below and tell me honestly what you noticed in your own August payment this year. Did it go up, did it go down, or did it stay exactly the same? I read every single comment and I answer as many as I can. And if you want to stay ahead of these changes every single quarter instead of finding out the hard way, hit subscribe right now, because Service Canada is not going to call you before the next reset hits. I will be here to break it down for you, exactly like I did today. See you in the next video.